Welcome back. Nikhil Ranka is with us, Chief Investment Officer, Equity Alternates at Nuvama Asset Management. Nikhil, good afternoon. Good to have you with us here as always. 3 days, 400 points on the Nifty. More to go. What's your sense?
So, good afternoon, Prashant. If you look at the fall in the initial part of the month, Prashant, when we fell from 26,000 odd levels to 25,000, a large part of the fall, my sense is attributable to the yen carry trade unwinding that we have seen. So if you would have seen, the Japanese 30-year bonds had rallied almost to 3.8%, and in one single day, bond prices in Japan were down by almost 4%. And if you look at the number, it's almost close to $7 trillion, which is there in terms of yen carry trade across asset classes in that sense. So when people saw, the funding cost starting to increase and money not being made in equity markets, there was some unwinding that we saw because of that. Having said that, if you now look at the starting point of valuations for us, we are now at close to 18 times FY28 earnings. And historically, unless it's a black swan event, we have not gone below 17 times. So from that perspective, markets clearly are looking very, very optimistic from these levels. My sense is, over the next few months, we should start heading back up, and our target price or the fair value of Nifty on an FY28 basis still remains close to 28,500. So that's a clean 3,000 point upside on Nifty over a 12-month horizon.
Which is by December this year, 28,300.
Yeah, because by December this year, we would be completely factoring in FY28 earnings, and the consensus is close to 1425 in terms of FY28 earnings.
And this assumes what earnings growth this year and next year? In 27 and 28?
So we will end FY26 with close to 1150, 1160 rupees of EPS. FY27, we are penciling in 1280, and then 1425 in FY28.
And Sorry, go ahead.
So I was saying 1160, 1280, and 1425. That's the trajectory that we are penciling in currently.
Got that. And all the pessimism or the unwinding, the impact because of yen carry trade has played out? Because it's not that the other emerging markets declined this week, the way India did.
Yeah, so India had the twin problems, one of currency depreciation as well, Rima. So if you look at it, our nominal GDP growth itself, this year is 9%. Last 2 years, because earnings growth had been in single digit, the market returns also have been in single digit, less than single digit for India. For last 15 months, we haven't done anything. So in that sort of scenario where, you are losing on rupee depreciation by 4-5%, it made little sense for foreigners. And so we've seen that in the FI outflow number as well. We had close to $30 billion of outflow in calendar year 25. For the first month of this year, we again had close to $3 billion of outflows. Having said that, my sense is we will start getting back to double-digit earnings growth from FY27 onwards because the base is starting to look favorable. And historically, if you look at it, foreigners ran an overweight of 2.5-3% to MSCI emerging market weight index for India. Today, as we speak, that number is an underweight of close to 1.5%. And historically, be it the Chinese market or any other markets, we have seen that, once people get underweight on a particular market and then for some reason there is positive news flow in that market, the reaction on the opposite side is also equally swift. So therefore, from a scenario where we were extremely euphoric 15 months back, today we are at extreme pessimism. But this makes a very good bargain hunting ground in my sense.
Actually, your earnings growth is back-ended in 28 over 27, right, Nikhil? 10% this year, 10% in 27, and 15-16% after that.
Not 15-16, really 12%, because 1280 and 1425 if you look.
Oh, 1425. Okay, I heard.
It's about 11.5%.
Okay, I heard 80. Okay.
So
now
in line with nominal GDP growth, I would say.
Okay. And assuming nominal, we'll get the budget numbers, etc., on Sunday in terms of what the assumption is. The economic survey is saying 6.8, 7.2 plus 4%, so somewhere around 10, 11%, right? Not very different from where we are for 26. in that sense. Now, Nikhil, if this 3,000 points is to play out, where will we see it in terms of which sectors, stocks, and how to position yourself?
So, Prashant, we just did some analysis on all the sectors. And, we were just doing a stress case for the banking sector. And an interesting data point was that for the first time in the last 10, 12 years of my career, you would see that none of the large cap private sector banks is more than 2 times price to book on an FY28 basis. You take the like of any of the 4 top large banks, adjusted for the value of subsidiaries, all of them are today trading below 2 times price to book. Now, if you look at it, you are still looking at an 11-12% sort of credit growth rate. NIMs would have bottomed out in Q4 of FY26. And at least from the commentary, it seems that credit cost is still very well contained for most of the large cap banks. Nobody is saying about any caution on the credit cost cycle. So therefore, FY27 should definitely be a year where we will see close to 15% earnings growth for most of the large private sector banks. And then, if you mix the two, where you will see 15% earnings growth and less than 2 times price to book valuations, I think a lot of outperformance should come from the large cap banking space going forward.
Got that. You were telling us if you had to take one big sectoral bet, this was in December, you said it would be private sector banks. But it's just that this earnings season, we haven't seen any fireworks. Very subdued. Stocks negatively reacted to the earnings, except for Axis Bank, which was a standout performer. Have you done any stress test for the broader universe, the mid caps, the small caps, the BSE 500? Because their prices have corrected 30, 40, 50%. How are the valuations looking? Any sort of analysis? Because you spoke about bargain hunting prices now.
Yeah. So, Rima, if you just look 6-9 months back, BSE mid-cap index was actually trading at a 27 to 28% premium to NSE 50 index. And historically, we had not seen that sort of premium in the mid-cap space. One of the reasons for that is we had a lot of inflows in the small and mid-cap space in the mutual fund category, and therefore prices were very well bid up. Now, as we speak, stocks have, although the broader market would have seen just 5-6% drawdowns, however, the mid-cap index, most of the names would have seen 25, 30, 35% drawdown on an average. And therefore, even there, I would say a lot of pain in terms of, or the froth in terms of valuations have gone away. Now, these stocks should start tracking the earnings growth and bottom up wherever we see decent numbers in mid-cap space. I think stocks will start reacting to that.
So now what is the premium of BSE 500? It was at 27, 28% about 6-9 months back.
Yeah, because the index itself might not have declined so much, that premium should be down to 15-16%, Rima, is my sense.
Okay, so IT is one clear, large cap private sector banks is one clear area. What else, Nikhil?
So just on the domestic plays, as I highlighted last time also, Prashant, telecom is again starting to look very, very attractive. Some of the large cap stocks have fallen 12-13% from the peak because clearly the fear over there is, both the promoters have said they want to maintain equal stake. So there could be some sort of stake sale that can come through post quarterly numbers. However, having said that, the India business for the largest telecom guy is now at second largest guy is now close to 12 times FY28 EBITDA. And the downside is looking very low from these levels in a lot of these names because, the business model is pretty defensive and we are looking at tariff hike in the near future. So from a risk reward point of view, I think the sector is starting to look compelling. Even the tower play in that sector is starting to look good because with the government giving package for Vodafone, clearly the tail risk that it will become a two-player market has gone out. So both those stocks are looking very attractive from a medium-term perspective to us.
Okay, all right. So telecom is the other
Bharti and Industas.
clear sectoral pick. By the way, not to let you go without asking any expectations from the this budget. And especially with regards to, okay, let it be open-ended question. I wanted to ask about equity taxation or taxation on debt or equity, etc. But let me throw it open. Anything really, something which you think can happen, high probability.
So Prashant, the good part about this budget is people have very low expectations getting into the budget. So if you look at it, they had raised the exemption limit to 12 lakhs in the last budget itself. And given that this year direct tax collections are tracking just 7-8% growth instead of the budgeted 12% growth, I think the headway on that side to give further exemptions is extremely limited. On tobacco side, we've already seen changes. So incrementally, I don't think the budget will have much for the tobacco sector. And indirect taxation is now anyways a prerogative of the GST Council. So nothing should happen on that side also. The only thing then that remains to be seen in the budget is what sort of growth do we pencil in for the capex. So last year we were at close to 11.2 lakh crores. My sense is the street is expecting a number of close to 12.5 lakh crores for capex this year, which should be a 10-12% growth. Even if we pencil in lower tax collections, I think the revenue side should see, revenue expenditure side see some cut. We shouldn't get a cut on the capex side of it. In terms of taxation, Prashant, I think, we have seen that this government has been in favor of having more or less similar taxation for all asset classes. So just to give some preferential taxation for equities doesn't seem to be the base case in my view. I think it is unlikely that we will see any tinkering on either the LTGC or STGC, and the street is also not going with any assumption on that front into the budget.
Oh, okay. All right. Fair enough, Nikhil. We'll speak again post-budget. It's a Sunday, so we're all working. And thank you for joining us as always. Appreciate it. That's Nikhil Ranka from Nuvama with perspective on markets and the budget as well. Now, we were talking about Hindustan Copper. Stocks locked up in upper circuit.